said and done, the fact is that 37% premium from the current market price, a lot of shareholders in TTML would not have expected that and would probably reasonably happy. We'll find out the reaction when, of course, the markets open up. But we've got, of course, Mr. Balakrishna here from Centrum, who's joined us in the studios. Thanks very much, sir, for joining us in. Just coming back to the macros, the bigger picture, we had been talking about this earlier as well. From the last time we were hearing you on the same show to now, two parameters have come out and they've not been that bad. A, of course, IIP, which was slow, but perhaps it was showing some signs of a pickup, particularly the capital goods space, and the other, of course, inflation, which came out in single digits. Anupam here was just mentioning that let's not get too excited. We haven't really seen the real extent of the pain. That will only come in the next 1 or 2 months. What's your view?
No, I think I share Anupam's thoughts on this, and I think as we were talking, I think numbers are finally catching up. Okay, in terms of prices falling and everything. I think the worst fear is if this, the way commodity prices are going and the composition of WPI is such that at some stage we will start worrying whether we are actually headed into a deflation. Because IIP starts coming down, commodity prices start tickling, I mean they've already fallen so much, like whether you take a steel or iron ore or anything like that. So if both start coming off dramatically, and inflation, see what will happen is after the first quarter you will have a base effect, which would mean that you will actually have degrowth in prices also. So if both happen, you are actually looking at a kind of a deflationary scenario. So I think what I read it is, yes, there are worries on the industrial production front. I think it could turn to flat to negative in the next fiscal year, which is 9-10. And I think that is where I would like to focus attention on, because that can drag your GDP really down, and my call is that the GDP in 9-10 will be far lower than what we will see this year.
And this wouldn't have been factored just as yet in prices. We were also talking about the fact that no one's going out there and sticking their neck out and talking about your Sensex FY10, FY9, FY10
Exactly.
target.
Everybody has an FY9 Sensex EPS of anything from 850 to 1000. But the same thing could actually drop by 20% in the next year. So then what multiple are you looking at? Basically, it's the call.
How do you play the capital goods sector here, Mr. Balakrishna?
I think I would wait for that. I think they still have some pain to go. I have some anecdotal evidence. I was talking to a few buyers of capital equipment. They say suddenly the companies are approaching them saying, instead of 18-month delivery, I'll give it to you in 6 months. And there are price discounts of 30% being offered. So what you would see what their problem is, they're saying that they're getting their payments are getting stuck up, working capital is increasing. So they would rather focus on places where they would get their money quickly. And said, yes, last 2 years we have made supernormal profits. We don't mind doing it at a reasonable profit now.
But what do you make of the IIP component, the numbers that you've seen within the IIP, the internals of it? Last month it was extremely low at 2.5. This year on a year-on-year basis from 20% it's grown to about 18%. Is that relatively sanguine?
I would think so. I think whatever be the statistic composition, at least it's a consistent base which is being followed.
You know, the funny part was I was reading an article about this entire China stimulus package, and it said 3 places will benefit: Brazil, Japan and California. Brazil for iron ore, Japan for farm equipment, and California most interestingly because they're probably one of the largest players there of machine tools. So all of a sudden you're starting to think of demand growing. Views coming in from corporate India on the current situation. Bala, this entire deal about Tata Teleservices Maharashtra and NTT Docomo, I was just making the point that you go to Japan, you sell and you find a buyer. But for this particular transaction, the valuations?
See, I have not looked at the valuations per se, but I would look at it in that context also. Like people like Docomo, I think they are spewing out so much cash. They have to look at alternate investment and look at growing markets. Okay, this is a premium you pay for entry into this market, and probably I think the Indian market has got all the players in the world now. I think the Japanese were the ones which were really left out. So I think as the biggest player in Japan, he's probably paid a premium. And if they can spin it off, I think why not? There is some premium you pay. But I think that the funny side to it is that every time the Japanese come into a large sector, I think that sector starts to tank after that.
but Bala, let me just take this point forward. The quarter gone by actually brought out some amount of pain in some of these companies. Idea for that matter, that 45% drop in profits. Bharti was seeing a squeeze on either minutes of usage or ARPU. Of course, that's been a continuous trend. But if the Japanese are coming out and paying a near 37-40% premium, I mean, are they seeing some kind of a growth story here which we are getting a little too pessimistic about? How would you rate telecom and from here on in this environment for the, let's say, the next couple of years, 1 or 2 years?
I think, see, this is again the whole point of the issue. Are you looking at any industry or a business for a 2-year perspective or a 20-year perspective? See, if you look at it in the longer term, I think there is no escaping the fact that telecom is going to be a big driver. If you look at it in the next 3 months, 6 months, yes, I know people are losing jobs, so they'll probably cut their cell phone usage, your ARPUs will come down. But I think we are missing the big picture then. Okay, what you are paying, okay, the reasonableness of a price you pay is debatable. What is reasonable to me may not be reasonable to you. So it's a question of perspective. They have
but do you see profitability getting squeezed increasingly going ahead?
It will, in the next couple of years, it will get squeezed as I think the pains of slowdown, consumers start tightening their wallets. It's bound to happen. See the number of jobs getting lost. And everywhere, if everybody wants to control cost, I think these are things which you can, from a 100 rupee usage, you come down to 80 rupees. It's a 20% loss for the industry.
Add defaults onto that. Today's newspapers are carrying an article about Ispat having defaulted to UTI of about 100 odd crores. It's a problem here, Anupam. You're looking at top line growth coming under threat. Forget that. You're looking at corporate India starting to default on payments. Just taking Bara's point further, looking at the macro picture, but then again, it's not possible to have more than an X amount of months or a year view in this market. It's very easy to just come in and say, have a 5-7 year horizon, but barring an odd day like this where the Dow has gone up and you come in and see markets crashing every day and a sub 8,000 index, it's not easy to come out and say, okay, I'm confident to have a 3-4 year horizon when you're seeing corporates default around you, people cutting back production, etc.
Definitely. You don't have any earnings visibility in this market for more than 3 to 6 months. I think that's the reality that you have to now adjust to. And that's the reason why you're seeing these almost tectonic shifts in the index itself. You know, you had some explanation when the market fell from 20,000 to 18,000, you'd say it's because of we had picked out valuations, blah, blah. Then you had one fall from 18,000 to 14,000 and you put some reason for that. 14 to 12 was another story altogether. And the minute that you thought that, okay, the bottom was there at about 12,500 on the Sensex and 3850 on the Nifty, you thought that the worst fears were basically the entire credit crisis, liquidity, blah, blah. Now you're staring at an actual economic slowdown, which is there globally. You have no idea how it will impact India.
You know, speaking of defaults, another report over the holiday, Unitech might be selling their Delhi office. Now, there's some ambiguity over
HDFC
whether that
didn't
was...
confirm it.
Exactly, HDFC didn't confirm it. But the fact is, if this company has lost 90% of its market cap over the last couple of months, how much down can it finally go from here?
I don't know. I was interviewing him recently. I told him your stock went from 50 to 30. You asked SEBI to probe it. You didn't ask them to probe it. When it went back from 30 to 50, he said somebody found value at 30. I said, okay, if you find value at 30, why couldn't you have found that value at 50?